markets looking as good. Let's get to Joe Bell, Schaeffer's investment research senior equity analyst. His top performing stock pick up nearly 140% since he told you to buy on this show. He's here with 5 more names. Plus, we've got Scott Bauer in the pits of the CME. Let's start with Scott. So we had the UMISH data, which looked very healthy, and that certainly helped to propel the markets. We never saw a lower move for the Dow.
No, never looked back. Today was one of those classic melt-ups. It was unbelievable. You know, like you had said earlier, we were down pre-market, came out up 3-4 points in the S&Ps, and it was just a straight slow grind shot up from there. And I'll tell you, not only was there many shorts getting squeezed in the equity market, there's a lot of guys out here that they were telling me that got squeezed today also. After the little downdraft yesterday, guys went home a little short, actually thought this might be going into option expiration today, maybe a time that we were going to see that pullback, but these guys were short, and they're all covered now, and actually, if anything, they are really bullish going forward. I mean, this is just crazy. That consumer sentiment number that came out today, unbelievably bullish. And we're also seeing the VIX trade back towards that almost, support level, 12.5. It actually went lower than that today. Boy, the rest of the week, that when we saw stocks going up and the market going up, the VIX actually rose. Today got absolutely pummeled. Absolutely pummeled. This market, with the economic news we're seeing, with every single government,
that is the bottom line, Joe, that what Scott is saying is absolutely true. The encouraging thing about this market rally, it's happening with a strong dollar. For so many months, even years, when the dollar's improved, we've seen the market go down. Today, everything's going up in tandem. I think it's fair to say, Joe, correct me if I'm wrong, that it is no longer a Fed-based rally, that what we're seeing now is an economy-based rally. Do you agree, Joe?
I would agree, and I would say that people have been saying this is a Fed-fueled rally for quite some time and haven't really been giving this economy the credit that it's due. I think the economy is on much better footing than most people would give it credit for. I think we've seen improvement, especially in the housing data. Jobs have slowly improved. We're starting to get some of that consumer sentiment data or indicators that are becoming better than expected. But overall, I think for quite some time, we've seen an improving economy that people haven't been giving it credit for. And just now you're starting to see this data catch up to the strong market.
Hey, Joe, that's a good point, because you saw J.P. Morgan's analysts throw in a little towel, a little hand towel, because they've been pretty bullish. But they changed their S&P year-end target. It had been 1650. They have now changed it to 1715. That is really a major move, is it not, to see the number 17 in front of the entire attempted sort of price target here for the S&P?
Well, it seems like it, but we're above 1650 now, so they probably had to revise that. But when you look at analysts,
are you revising yours then?
Yeah, we're back above 17 as well. We actually had a year-end target before we entered this at 1650.
Right.
We're up around 1650 now, so we've had the strong price action. We do expect that money to continue to flow off the sidelines, so we would expect higher prices through the end of the year now. But getting back to those analysts, they've been incredibly bearish. We look at the analyst buy ratings on the S&P 500 components, only about 49%. Reverse back to 2011, they were at 55%. So they've actually decreased their buy ratings during a market rally that's almost doubled. So historically, market tops have occurred when you have that optimism. Right now, you talk about analysts, they haven't. They're a little late to the party, and I don't think we're near a market top, because that's one reason why.
By the way, Joe, I already got an email from somebody saying, what was the stock that Joe had that was up 140%? That was Netflix, by the way. You were on in April, but you also were on in January. Back in January, we recommended Netflix. It's up 140%. So kudos on that. But I want to get back to Scott for a second. There's Netflix. You've seen the unbelievable rise since Joe recommended it. But, Scott, let's talk about gold for a second, because we do have a lot of gold bugs out there wondering whenever this gold is going to change its price. It's getting close down to that $13.50 an ounce level. I understand you think that's a very key area. If it breaks below $13.50, what happens?
Well, last month we saw that really violent move down to $13.50, rallied back. Now over the last 7 trading days, we're down almost to that level. These traders out here are telling me, and if you look at the charts, it's certainly substantiated, that if we break through $13.50, we're in no man's land. We could move another 10% to 20% downward over the next couple months, really down to like 1150 is the next clear-cut area. And I'm telling you, it was such a violent move a month ago, and then that rally back. And now that we've kind of just dogged into it, right? Little by little, got back down to that support area here. If we break it, you are going to see the energy. You're going to see that violent move probably propel this thing downward.
Okay. So, but regardless, Joe, you feel that there are names that people should really be in. Let's put up some of your names. You're talking about some consumer discretionary names. Tiffany is not something where you look at and say, oh, I'm going to buy that if we think that there's going to be a real problem with the stock market, and yet you like it here. Why?
I definitely do. That's a name that has a lot of short sellers targeting it. Analysts are late to the party on that one as well, and we've seen incredibly strong price action. All we've been hearing for quite some time, the past couple of years now really, is the consumer is dead. All of a sudden now we're getting some bids on this consumer sentiment data, but for quite some time we've been hearing that the consumer is tapped out and they're not going to go out there and buy. Yet these companies that rely on the consumer to be healthy and doing well, they're near all-time highs. You have the XRT breaking out. It's been at all-time highs across the board. So strong price action, a lot of skepticism. To us, that combination is very bullish.
Now, Chipotle is sort of a different animal here when it comes to that, because while it doesn't require a lot of discretionary income to go to Chipotle, there have been a lot of questions about that company, although lately it's looked pretty healthy at the moment.
Yeah, that's another one. Price action's been strong. I think fundamentally stores are still seeing a lot of traffic. There's just so much doubt on that one. Short sellers targeting it heavily. Even a lot of option speculators continue to bet against Chipotle, and that's a name we think is going to continue to resolve to the upside. Strong trend, a lot of negative sentiment. We think there's a lot of sideline money that's going to flow into the restaurant name, specifically at Chipotle.
Hey, Joe, next time you have a name that's going to go up 140%, please come to us first like you did last time. We need those names.
I'll try to.
They're very helpful to the overall portfolio. Joe Bell, thanks.
Yeah, that was Green Mountain Coffee Roasters. Very nice pick. And Scott, we'll see you in just a few minutes to see how the S&P futures close.
Okay.